This is Teddy Keckstedt from Forex Trading Unlocked, and we are here today on Wednesday, January 26th with a Forex and cryptocurrency trading analysis video for you. We have our disclaimer pulled up just to remind you that this webinar is for illustrative and educational purposes only. And check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in Kindle and paperback versions. We will be showing you some signals that have been going on in the marketplace and see how they have performed. Also, we would like you to also, if you get a chance to, or if you haven't done so already, like and share, as well as subscribe to our YouTube and Twitch channels, Forex Trading Unlocked. Alright, now let's get to what you guys are here for. Alright, so let's pull up our live action screen here and see what is going on. Alright, so we have the EU. It is skating on thin ice. Boy, is it ever. So if you will notice how things have been going lately, obviously it's been a grind. Every time this market tries to get a rally, it just doesn't seem to be able to pan out. So what is the best way to deal with this market? Well, one is we got to wait for a signal. So what is going on here? Well, fundamentally and technically speaking, there are a couple things that you can look at when it comes to this market. Okay, so fundamentally, we know that there is the Ukrainian crisis, which is definitely going to have some sort of I would say ramification on the EU as well as the euro currency. So if things subside and do not escalate, in that case, I would say that the euro, not necessarily would it become a bull or be strong. I think that what it does have the potential to do is to at least hold its ground. Now, should tensions escalate, that's a totally different story, okay? Now, if they escalate, then I have to tell you that things are probably not going to bode very well, okay? So what I would do is be very mindful of selling rallies right now, and as far as buying, I would wait for definitely a valid buy signal before you do anything. Now, today is Fed Day, so what does that mean? That means that right now there's a lot of indecision in the marketplace. We're waiting until 1:15 Central Standard Time to 2:15 New York time for the Fed meeting announcement to come out. Now, expectations we know are that there will be a bunch of rate hikes coming out over the next year, or definitely probably longer than a year. At what rate and to what degree, that is all for debate right now. The consensus is at least 3/4 point raises over the course of the next 12 months, with other people projecting as much as even 6 before the year is out. I would say that the way our Fed has been reacting and the way I wouldn't say that they're slow to act, but the way their speak is, I would think that today you're most likely not going to see a rate hike. I don't think that is, it's not that the rate hikes are off the table. We're just most likely not going to see it today. So most of the currencies and the interest rates are quiet because of what is going on with the Fed. They're waiting on the Fed, so there's not much action there. We do have some currencies that are moving, and we will get to them, and we will show you why they are moving as well. We have oil that has made a higher move high today. Oil influences a lot of what is going on in certain currencies. So the euro also, with oil going higher and with these Russian tensions with the Ukraine for natural gas, which is supplied by Russia as well as many other things to the EU, this doesn't bode well for them. So right now it's not a political tug of war anymore. Now it has become an economic tug of war, and right now I think that no matter what, there's going to be a lot of bruising, meaning that the bears for the euro have a good chance at profiting. Like I said, I would look to sell rallies. We had a valid sell signal here a couple weeks ago, this bearish engulfing line sell signal. It already hit its target. We hit this upward sloping support line, holding this short-term sideways to upside correction, if you will, intact. Yesterday we pierced through it. Today by attrition we are trading under it, right on the line. We'll see where we close today. Like I said, the Fed meeting is until after 1:15. Don't expect very much. Once the number comes out, whether there is an action or inaction, I do believe you probably will see a little bit of volatility. But remember, usually you have knee-jerk reactions on Fed days, so be very cautious. If you're not already in a trade, if you're short, you're in a good spot. I would key off of, if you're just getting into the market, then I would say 113.74 puts a cap on any type of rally right now. If we take that out, it basically has us neutral. I wouldn't say bullish, but it is possible for us to get a knee-jerk reaction to the upside. I would use caution though. Right now we are coming off of a higher move high and a lower move low. So when you have that, that means no longer do we have the higher move high, higher move low, higher move high, higher move low, indicative of an uptrend or upside correction in this case. Now we have capped it, and now we have made a lower move low. So it puts us at least on neutral. Does it make us bearish? Well, with those fundamentals, yes, but technically not necessarily so. So should tensions subside and calmer heads prevail, which you never know, then maybe that happens. Okay, so we'll see how this goes. So we're going to start moving around the globe. If you haven't already tweeted out and shared our video live right now, what's going on, we would hope and appreciate that you do so. And also in the chat box, don't be afraid to leave any questions about any of the currencies or any other markets you'd like to talk about. All right, so since we had the Euro US dollar covered, now let's see what is really driving things. So real quick, XTIUSD. This is a new high going on in oil. Oil will be impacting the rest of the currencies we talk about today. That's what's causing a lot of the divergence. If you are looking at the dollar index for direction, even though it has been pushing higher through resistance, that's probably because of the weakness in the euro more than anything else, and a couple other markets. And we'll see how some of the broader major currencies are starting to become rather weak versus the dollar. Some are not necessarily bulls, but they're very resistant to neutral, and we'll show how that is and why. Oil is being one of the biggest influencers. The fact that we're making new highs in front of this Fed meeting, it will be very interesting to see what they say. They seem to remember that the Fed wants you to believe that we've only been running at 7% inflation. Sure. So anyhow, gold has a potential bearish engulfing line sell signal forming. This is key because right now gold has been rallying, the dollar has been rallying as well. The question is gold helping to strengthen the dollar right now, or is it not? If there's a big sell-off and divergence between the dollar and gold, obviously that would not be the case. Be careful though. This has not formed until the close of today and rolling into tomorrow. This signal is, if it was to close today where it's at, that would be a bearish engulfing line sell signal confirmed. Right now, we could have a big rally after this Fed announcement, and all of a sudden we have new move highs in the gold market. Remember, this market has been trending higher, making successive higher move highs, higher move lows, and that means it is a bullish trend right now. Right now, however, we are looking for a potential sell signal that is forming. That can have a key element to what goes on, especially when it comes to the Canadian dollar, Australian dollar, and also the Japanese yen. So let's get to the British pound US dollar first. We got to finish up Europe. So we had a little bit of a lower move low yesterday, not much of a poke through support, but we did make a lower move low. Today we are slightly higher. Now, are we bullish? On the day, obviously the bulls are in control, but you can see the range is very, very tight. Once again, FOMC meeting. What is helping to give a little lift to the pound? Probably the fact that the interest rate market is flat right now. In fact, why don't we, since we are talking about this and it's Fed Day, let's just check. We go to the CME.com website. Futures are in delay as always, but we can get a good indication. I want you to see this since this is live. This is a tool you can use. Look at unchanged, 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 one tick different in the 2-year note futures. That's a Fed day, folks. There is nothing going on in the interest rate market until 1:15 Chicago time. Remember, 2 o'clock they close. for the interest rates for the day. Obviously computers go on, but that's the role. So it'll be significant to see which way the interest rates do or do not go. Okay, now they have had a nice little bounce, but they've been trending lower. No matter what, longer term, the prognosis and forecast by most individuals out there is higher interest rates, which means lower ticking 30-year bond and 10-year prices. What does that mean? So if they continue, U.S. dollar, interest rates continue to trend higher in price, that gives strength to the dollar. So that would weaken this British pound U.S. dollar trade. Right now, remember, this market has been in an overall bear market for quite some time until the last, obviously, you can see, month and a half. So the question is, was this an upside correction that was capped? And by the way, here, this was a sell signal here, a bearish engulfing line sell signal. This one pretty much came into our target range. And just to give you a little visual, if you look at as far as a retracement basis, your 50% line is right here, and your 0.618 line is right here. So what does that mean? Well, it means that we bottomed out in a nice little range. Do we have more room to hit support? Absolutely. Could we see a really big dramatic spike lower and then see a big turn to the upside? We can see all kinds of things. However, what is giving this market strength? Oil is helping out the pound US dollar. The pound is also relatively stronger versus a lot of currencies as well out there. Remember that it is one of the strongest weights in the dollar. It is second largest weight in the dollar index. However, it is going opposite of the euro. So the euro, which has been trending only slightly higher over the same period, you can see that there was much more strength in the pound US dollar. That has a lot to do with oil. Remember, the UK, they don't care about Russia and what they're doing. Well, they care about the fact that they don't want any trouble going on that close to their borders. However, they're not relying on Russia when it comes to especially oil. They have all the oil that they want. They are an oil-producing country, and they have oil all over the world that they control. So that's helping to give a little support to the pound US dollar. So remember, it's Fed Day, so I'm trying to give you guys everything I can give you for today. There's just nothing right now on an intraday basis. If you're not in a trade, all I can say is you should not be getting into one right now. Do not try and gamble on what is going to happen with the Fed move. It could be a non-event. We could have absolutely no market behavior, a totally quiet day, and then we'll just hear all this the noise over the next 24 hours and see what happens tomorrow with these markets. So however, right now I look at the pound US dollar as having set a short-term bottom. I think you will see a little bit more of a rally at the very least. So let's see if we are correct. Let's say that we already did bottom, put in a short-term bottom. How far can we go to the upside? Well, let's look at this. We'll put our 0.50 and our 0.618. So just the retracement back up into this little zone right here over the next couple of days could be very likely. Now this could be with the euro going lower and the pound going higher, which we totally put a stopper on the dollar index. So we'll probably make it, if it continues to rally, it will be very slight in rallying, especially if there's a big pound rally. Now, should there be a sell-off in oil? Okay, now remember, we looked at the oil chart and it was just making new highs today. Let's say that for some reason, for whatever reason, I can't think of what it would be, that oil starts to sell off like $3 to $5 over the next few trading sessions. That would lay credence to having a sell-off in the pound US dollar, especially if you see a sliding 30-year and 10-year, 30-year Treasury bonds and 10-year Treasury note markets. If they continue to trend lower over the next few sessions into the end of the week, then, and also if oil corrects, then I could see where the pound may actually have a sell-off. But I don't think that's very likely. I think that it's most likely oil is not going to correct, and then the oil will outweigh the interest rate factor, giving pound US dollar strength. Now, you think there's indecision going on in Europe and wondering what's going on. We got the big sideways going on here with the US dollar Swiss. US dollar Swiss here is chop suey, baby. It just does not. It's been in a range trade for basically, well, at least the past 6 to 8 months, let alone in a tight range for the past, as you can see, 4 months. Between basically 91 even and 93 half, this market is just in a gyration, going up and going down. Sometimes you get a good trend. Now here's something interesting. If you look at today, we're getting nice follow through. It's ironic that if you look at the European currencies, and this is why I say you gotta be very careful on days like this. The euro and the pound are the two biggest traded currencies next to the US dollar out there. Look at the range in the US dollar Swiss. Is it that big? No, it only looks big because the overall range for months is pretty tight. But it does have a much more active trade than, say, the euro does today or the pound. So that is a little significant. Remember that the Swiss is a flight to quality currency. However, with Russia leaning its guns into the Ukraine, which is not that far from Switzerland, I don't think that Switzerland has to worry about Russia trying to invade them anytime soon, nor do I think that Russia wants to invade all of Europe either. I seriously don't think that they do. So the Swiss, is it going to really sell off because of that? Probably not. I think the biggest factor on the Swiss is the fact that oil prices are rallying, interest rate prices are going up, and those are two factors that are weighing on the currency, where the US dollar has much more strength fundamentally and technically than the Swiss does in the short run. Especially with all eyes on the US to see what they're going to do with Russia, which I can't even begin to say how bad I'm not looking forward to the next month and a half as this turmoil goes up. I've been predicting for a year that after the Olympics, the Chinese will be attacking Taiwan, and also that it was very likely that Putin would be, and I was thinking it would be more Latvia, Lithuania, and Estonia. If he was really an aggressor, that if that would be the case, that he would attack and move into those countries first before the Ukraine. So, but obviously, that area of the world is more important of a piece to Putin right now. And if you ever played the game Risk, you could see why Putin wants it. And also, you have to look at the other side of the coin. Is this is not taking one side or another, but the U.S., the UK, and all the European countries, and especially since the EU has formed, and the coalition of NATO have all been in violation of the treaty that was set between the U.S. and all of these countries when the former Soviet Union fell and turned into what is now the Russian Republic. So I'm not going to say who's right or who's wrong, but the reality is that for the past 30 years, we have been, the U.S. especially has been in violation of these treaties. Whatever your take is on what should or shouldn't happen, I don't think it justifies anything going into the Ukraine, but I think what you're seeing is Putin basically showing the world that unlike other countries that don't secure their borders, since NATO has violated the treaties, and especially if the Ukraine joins the EU and NATO, well, they're putting up a new Iron Curtain. So, and it's not going away. So, and this is going to weigh on the Swiss. I know you guys are like, why is he dwelling on this? Once again, it's a Fed day. We don't have much to talk about as far as where things are going. This market here, once again, is sideways, coming off of a lower move low, a lower move high, then a higher move low, and a higher move high. So this is just set for neutral. Maybe it's going to go higher, but only a challenge. It's got to get above this 92.78 and break out to the upside, which even then, it's probably going to run out of gas at 93.5. Now, now what would change this? A skyrocketing oil price once it gets above $100, as well as if the interest rates, let's just say that the current Fed, which I don't see them going back to the Volcker era type of management of interest rates, if they go a half point at a time, and especially like for instance came out today and did a half a point and then did another quarter point or half a point in the next Fed meeting, that would be something that could accelerate a move to the upside, meaning bullish US dollar Swiss. Are we going to parity anytime soon? Probably not, but it could push the upper boundary of what is this sideways trade. All right, so now let's go talk about some markets that are moving. All right, and then we'll get to some cryptocurrencies for you guys as well. No questions on Let's see, we got no questions on the Twitch or on the YouTube, but we have some likes. I want to thank you very much. Hopefully you guys have done some shares. And if you're new to watching us, hopefully you are hit that subscribe button already. And if you haven't, do it. And tell all your friends. All right, US dollar JPY. We have a short-term upside target level of 117.28 and a long-term upside target level of 122 even. So what do we have here? Well, we had a nice lower move low planted at the bottom 2 sessions ago. Today we have a nice rally going on as well. We're just below the highs of the day. This market hasn't been laying off resistance all day. A lot of it has to do with, once again, higher pricing crude, the interest rate factor with the U.S. as well. There's also a bunch of other things that weigh on the U.S. dollar, Japanese yen. A lot of it probably has to do with the lockdown measures, and there's some new increased COVID restrictions going on in New Zealand that could really incapacitate their economy. They have a new contact tracing 20-something day quarantine. Whether you tested positive or not or is irrelevant if you're part of what would be, I guess, involved in whoever has been documented or tested positive with COVID. If you fall within whatever range that they say that it is, you will be put into quarantine for 20-some days. So I don't know how that's going to work with their economy when people are going to constantly be getting pulled out of work for when they don't even have COVID now. So that's messing up that trade zone. The good thing that gives the yen strength is the fact that their factories are all back online. Their numbers, their economic numbers, forget year over year, just on a month over month basis, will be interesting to watch over the next couple of months and a couple of quarters actually. So, and I predict that it will be strengthening in that regard. However, their currency, I think, will also be depreciating versus certain currencies, but not all. It's going to be weak versus the U.S. dollar. That biggest extreme is, 1, because of oil, and 2, because of interest rates. The BOJ, unlike the Fed, the U.S. Federal Reserve, has no intentions of messing with rates right now. They're not touching anything. And you know why? Why would they? Their major reliance as far as their economy, the biggest variable that they depend on is their exports. You know, they're an island, you know, and they have to import a lot of what they need to sustain themselves, as well as the only way that they have growth is to produce a lot. And if you can't get materials from Australia and New Zealand, which they rely on, that inhibits certain things. And if you can't export to those countries either, or it's restricted or slowed because of restrictions, that's going to weigh heavily on where strength goes, where there's bullish strength and bearish weakness, depending on what happens. And I have to say right now, you got to go with the trend, and that would support the U.S. dollar yen trade. So that's why we have 122 as a longer term upside target, especially with oil getting above the new highs. So let's just say we get up towards that $95-$100 target that I've been calling for. $100 oil is still another $14 higher, but that starts to really become a big factor when it comes to all kinds of things in the economy, people's decisions, especially in an inflationary environment. And not to mention that causes more inflation. It's just a cycle that just continues to grow and feed on itself. So that being said, long term, I would look for dips to buy. I would be very cautious selling into this market. If we breach this 115.08, most likely we will be challenging this 116.38 very quickly. Now, does that mean we're going to explode up to 122? No. I think we're going to do like we've been doing. We're going to make a big high here. We're going to chop around, go sideways, establish a nice support base, get a nice bullish engulfing line buy signal. Remember, you can learn all about that in the book, High Probable Japanese Candlestick Patterns, written by yours truly and available on Amazon.com. Okay, that's enough of my plug. All right, so here we go up, higher move high, but we didn't go up by that much. You see, we went from, where is this? This is a high here of 114.69 to a high of 115.52. So when you look at that overall, that's not a big leap through resistance, and most likely that's why we have 117.28, that you will see another swing high up like that, and then probably a little pullback like this, something similar to that. Now if you look at it, these are very symmetrical as far as their pattern, so it's kind of like the ebb and flow of how this rally is going. So I wouldn't expect to see, you know, major trending up days. Not that they won't occur. The yen can move, and it certainly does. As you can see, it sold off big here, and it had a big rally here, big rally here. So the upside does have big rallies. The bears, obviously, but you get your biggest breaks in a bull market and your biggest rallies in a bear market. So that is reflective. So this correction looks like it is winding down. Also, remember that this we made this lower move low, so we stamped that in. So this is key. So if you are an aggressive bull and you're worried about the fact that, oh, maybe he's wrong and this is the market's actually turning, then key off of this low right here. If you get below 113.47, well, then that puts us down trying to find support somewhere like we have been over here over the fall into the end of 2021. So if we still ride support down here, that's not necessarily meaning that this market will overall become a bear. It just means that right now it would be indifferent. However, the fundamentals that we've talked about don't coincide, so I don't think that's going to be a problem. All right, Australian, oops, that's not a symbol, AUDUAD, AUDUSD, there we go. All right, so what do we have here? We have a head and shoulders pattern that has been taken out as of 2 sessions ago. We've established a new move low off of that day that we fell through this resistance and took out, or support rather, took out the neckline. So do we have further to go? I think so. Right now, because of oil going higher and with interest rates being neutral in front of the Fed environment, I think that's why you're getting a rally to sell right now. I'd be very cautious being bullish here. It doesn't mean that this market couldn't turn around. However, we do have, like I said, this head and shoulders pattern that now we probe support. It most likely, if it's going to run its course for this, as far as how deep of a penetration you should have on support, we should get down to test the 70.5 area and even come near these lows here that we set back in the beginning of December. Now, if we get back down to those lows, that would be very negative for the Australian dollar, US dollar. Remember, there's all kinds of reasons why we would have a tug of war with this currency, but overall, I think that the COVID restrictions and lockdowns are weighing on it the most. So we shall see how that trend emerges, but right now we're bears. I don't have anything as far as, if you're a bull, I would just use a lot of caution, because if we fall below the 70.93 area, we're taking out these lows that has been basically the basis support for the past month and a half. So if we take that out, then we're probing the lower end of the range, then yes, new move lows are on the menu. All right, New Zealand dollar, US dollar. All right, so do we have any questions? No questions. But we do have another, oh nice, another like in the YouTube. Thank you guys. All right, keep liking and sharing and subscribing. All right, so New Zealand dollar bearish in a big way. So this is when I mentioned a few minutes ago about the New Zealand dollar and their new lockdown, or not, excuse me, not lockdown, but coronavirus contact measures. That's going to weigh on their economy. Now notice that the New Zealand dollar has made a lower move low after taking out this nice support. This market bottomed a little bit after the Australian dollar, US dollar did, but it's been trending higher just like that one it was too. Grinding higher, albeit though. But now this has set a lower move low on the longer term chart. So Australian dollar, US dollar hasn't taken quite the blow that New Zealand has, and this is all because of these measures. This was holding up better than the Australian dollar, US dollar, and originally the Kiwi was something I was not as bearish on as I am the Australian dollar. Now that has totally changed, because especially this new contact tracing thing, on so many levels, it doesn't add up how it could possibly function. You can't see anything but a further breakdown in society and their economy. That being said, only if we get above the 68.93 level will we be neutral, not bullish, but neutral. Anything below there is a rally to sell. US dollar Canada, this is interesting with everything that's going on in Canada. We're not even going to talk about the politics even between. It's kind of funny because we can't even get it still boggles me. I don't know if you haven't heard me say this before, the fact that the Biden administration and Trudeau aren't, because they're cut from the same cloth. I don't know why we have these issues, but we do. I guess it's who could be a bigger COVID dictator. So, especially with the supply chains. So this is weighing on the US dollar Canadian trade. Oil is helping to hold up the Canada. The interest rate factor is weighing on it, but there's also the Bank of Canada that are they going to be following suit in the same capacity as the US Fed? I don't think so, but I think they're going to be somewhat leaning in that direction. I don't think they're going to take the same types of measures, act as quickly or as extreme, but I do think that they will be leaning in that direction, but not as quick of a pace, meaning that our interest rate factor is much stronger. As you can see, for a Fed day, it's right in the middle of the trade. It's a little bit weaker. That's the interest rate, once again, is unchanged, but the oil is up. That's probably why you're seeing the U.S. Canadian dollar a little bit lower. What could give the U.S. dollar Canadian dollar a really big slide? Well, $9,500 oil, that's for sure. We had a head and shoulders pattern that came into great support. We bottomed. Does that mean that this bearish trend that we're in right now is over? Well, no. This market had been in a bear market for a while. It rounded out and bottomed, and this was an upside correction that we had been viewing for the last, if you will, take a look at this. So that's May of last year. As you can see, we bottomed here. This is the extension of our upside correction. We had a high of 129.49 there, and we have a high here of 129.63 here. So we probed a higher move high. We fell off of it. We're right in the middle of this range that we've been in for the past 6 months, if you will, 8 months. Are we going to go to the upside? Like I said, I don't think so. I think it's more likely that we're going to continue to trend lower, basically because I think oil is going to outweigh the interest rate factor. And if that is the case, and this is where we have that divergence in the dollar index. Remember when I started the webinar, and I keep hammering this on people, that the dollar index is still a good guide, but it's not going to be, there's so much divergence in where the strength and weakness lies in the US dollar that you can't just use that as a gauge for any individual currency cross versus the dollar. Just use it as the dollar on any given day for strength, momentum, versus weakness momentum. All right, so US dollar Canada, I think you're going to probe support again, fall back down on this 124.52 area. If we do, that's very bearish, and it's very likely we'll come and test these lows that we set back in October of 2021. Should we get above the high of a couple sessions ago, remember we're coming off a lower move low and a lower move high. If we get above 127.06, then we'll be set for a challenge of 128.14. Only if we get above here, you can see I have the up arrow. Am I bullish? Now, by attrition, we can go sideways and take out this downward sloping resistance line, but we could also very quickly fall back on support, widening it out the gap and keeping this downward sloping resistance line intact and supporting the trend lower. So we'll see how this manifests. Remember, it is Fed Day. Let's talk cryptocurrencies. You guys have been so patient to wait for the cryptocurrency. All right, BTCUSD, what do we have? I don't know. 2 days ago, we may have set a bottom here. We do have a short-term kind of stopper, if you will. So 2 sessions ago, we had this little spinning thing right there, right? So what is that? Well, it's kind of, not totally,
but it's not a hammer, it's not a doji. It's kind of like a doji, like a long-legged doji with a small body, if you will. So does that mean that it's a buy signal? Not really. It's more of a pause in trend, meaning that the market's set for a little upside challenge of resistance, but overall most likely sideways. But let's just say that momentum is there, the bulls come back. What do we need to have happen? Well, we're down here at 30, now we're at 38,224. Well, if we have to get across this 44,654 before we become bullish, we're making lower move lows, lower move highs. That is indicative of a bear trend. So until we have some reflection and confirmation that we are not making lower move lows and lower move highs, this is not going to be very pretty for any of you that are bullish. However, let's say that we do challenge is 44,654 and we breach it. Well, at that point, I would say we have a really good shot at rallying back up to this 51,000, just over 51,000 up to 55,184, somewhere in this area here. Now, does that make us overall bullish? No, but for an upside correction, especially if it's overdone, this would be a really good target area for Bitcoin USD. Now, something that coincides with Bitcoin USD is the fact that we have the Ethereum USD that has put in a short-term hammer bottom buy signal. Now, this is not the strongest buy signal. I mentioned it in my book, but it is more used for a short-term stop and trend, very similar to the one in the Bitcoin, although this one is a little more valid. And when it comes to Ethereum, I like the potential to the upside much better than I do with Bitcoin. So, but let's just say that we have a nice hammer bottom in here. What would be the short term? Short term, we go up to here. We don't have very far to go. So here's the 50%, and here is the 0.618 right here. Okay, so let's get rid of that. Okay, so if we get back to 27.95 up to 29.48, this would be a good stopping area if the bear trend continues. Now, it also could mean that we hit up into that area and we find some resistance and we start to go sideways. So I'm not overall as bearish. I mean, even though we're making lower move lows and lower move highs, I think we're set poised for a good corrective move to the upside for Ethereum. Now, whether that holds and manifests an even bigger rally over the long term will obviously remain to be seen. But right now we do have, it looks like in the short run, the potential to see this market pull back up into that area right there. Now, if it breaches that area, we still have a ways to go. The only way I see it really getting a big explosion higher is if we get above this 3,427. We get above there, that changes everything as far as the trend, especially because it would take out this downward sloping resistance. So would it mean we're overly bullish then when that occurs? No, but I would lean towards it being viewed as no longer an upside correction, but more of a neutral to upward trending, market move. Unfolding, and I don't think it's going to be a radical move to the upside with an explosive rally. The only thing that would do that is if you saw Bitcoin all of a sudden shoot back up to $60,000 or something like that overnight or in a couple sessions, in which case then Ethereum most likely would be shooting back up to make maybe even newer move highs. All right, so let's look at XMRUSD. All right, XMRUSD. Paper umbrella buy signal formed a couple days ago. Kind of. It is a paper umbrella. It's with this because this is there's not much volatility. It looks like a bigger buy signal or bar than it is. So, but anyhow, paper umbrella, is that overly bullish? Not really. Once again, this is a similar pause in the market type of thing. And should this be the case, a nice retracement back up towards, say, this $180 to $200 level is very likely. This market continues to trend lower, and obviously when it fell through support, it did in a big way. I have the floor kind of in 180 to 200 in this market, and now it's fallen below it, which is either a really good buying opportunity, or perhaps this trend really is just that strong in the cryptocurrency market still. But we do have a short-term buy signal, so I think we have a good chance at being neutral to higher, correcting back up towards that $180 to $200 level, and then we'll see. And that would put us right into this sideways area, and this was where we had support that we fell through. So the question is, will support become resistance and keep us from getting above 180, or will we challenge that and try and get a new trend going? So we'll see how that works. All right, DOGEUSD. Let's see what's going on here for the Doge, guys. This one of all things is making a little rally, but look at it, made a lower move low at 12 cents. So only if it gets above this 2160 area do we not get bullish, but then I think you have the greater fool's theory where this market could expand back up to the 30-cent level. If you're long down here and it gets up to 30, I would say you're incredibly foolish if you don't get out of your position, or most of it, because the odds are is that this market will tank back down and make even consecutive lower lows. The technology is just not sustainable. If you watch my past videos, you can hear all of the rants and raves about why you should or shouldn't look at this technology as a viable thing for the future. But also the fact that there's just it's people just are caught long. So that it has this, I think there's so many people that are caught long at 30 cents to upwards of 45 cents. I think that's pretty much the range where there was a lot of buying, and then a lot of whales got out. So there's people who definitely made a lot of money in the Doge, but as far as making it in the future, if there's another run up, and I can't see that it will be done in the same capacity, it would have to take a monstrous rally, I think, in the overall crypto the whole crypto space, considering like Bitcoin going above 100,000 or something like that. Then I think you could see a valid spike in Doge where there's enough interest that people will be like, oh, it's cheap, it only costs, a dime, or well, now 12 cents a coin. Why not throw a couple $100 or even a couple thousand at it, for funny money, and see what happens? So I think you may have a lot of that speculation occurring should we get a big move, but you have to be already in it. I wouldn't be looking to bank on that. So if you're already long from down here, good luck. Like I said, I would look to take profits sooner than later. But right now we are trending higher. This is viewed as a rally to sell. All right, so once again, it is Fed Day. Let's go back to the Euro US dollar where we started, basically unchanged on the day. We don't have any questions in the chat room. You guys are quiet. So anyhow, what I do want to show you guys though is that if you are available and you want to see something really good and hear me talk for an hour, I'm doing a webinar today. And this webinar is going to be for eoption.com. I don't know if any of you guys are out there are options traders. If you are, even if you use it for futures or other things, it's going to be a very valid webinar. We're going to incorporate technical analysis and show you ways of using some basic techniques to find strike prices and trade some options and stuff like that. eoption.com is a fantastic brokerage house. We want to thank them for sponsoring that today. You can find us either on their website, or you can find us, hang on one second, I'm going to get the link for you. Okay, so for those of you that are on Twitch, here is a link to a free webinar that you can sign up for. It's going to be on Zoom. All right, this is at 1 p.m. Central Standard Time today. Okay, so and the webinar is the mechanics of a basic option trade. Okay, so if you guys want to check this one out today, remember I said it's at 1 p.m. It is free to attend. It is a 1-hour interactive webinar where we will be going over a few case studies. We're going to have another gentleman helping out who's going to show a little order entry on the trading platform, as well as a couple other nice little things going on. So if you want to check it out, we'd appreciate it. Remember, that's going to be at 1 p.m. You can click on this link here. And for those of you guys that are on YouTube, let me post this link for you as well. So remember, this is a 1 p.m. webinar Central Standard Time, so that is in just an hour and a half coming up. So we would like to see you join us on that webinar as well. We are done with the Euro, US dollar, and the rest of the Forex markets here. What we would also like for you to do is, if you haven't done so, subscribe to our YouTube channel or our Twitch channel, Forex Trading Unlocked, and also make sure that you check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in Kindle and paperback versions. And once again, also subscribe and tell your friends about Forex Trading Unlocked. And also go to forex-trading-unlocked.com for all of your Forex information needs. #1 in Forex information. And by the way, on LinkedIn, our company page is #4 in the world for the Forex space, and #1 now for organic traffic and interaction. I want to thank all of you followers that are out there right now today watching us that have helped that happen. Take care. See you soon. See you hopefully at 1 p.m. on the